Welcome, ladies and gentlemen, to the Mines and Money conference this year, unfortunately virtual. And we have today here the Mining Pitch Battle Contest 2, which is the battery metals. And we have a lot of good judges here and also good companies. You know, our format is like Dragon's Den or like the Hölle der Löwen, like we call it here in Switzerland. And but we are much more polite. We are not roasting the CEOs. We want to get a lot of information and a lot of good information from our judges as they are top investors. And I hope that I see some participants here more coming up now. I think I give it another 20 seconds. Grace, is that okay? Okay, let's move on. We have judges here. First of all, Jonathan Cordero, who is the head of corporate development from Eurasian Resources Group. Then we have Philip Clegg, the portfolio manager of Orion Resource Partners. Then we have a lady from lovely Zug in Switzerland, Aline Carnizelo, commodities portfolio manager at Pala Investments. And then we have Will Smith, the chief investment officer of Westbeck Capital Management. And I'm not sure if we have Per Wimmer here, but I have also my list Per Wimmer. I don't see him by now, CEO of Wimmer Family Office. Yeah, just to explain that a little bit here, how we do it, we will have each company presenting 3 minutes. We will be very strict on the timing. Afterwards, our judges and investors have the time for 9 minutes of Q&A to really ask them all what they want to know, what they need to know, because the idea behind is how do they invest $1 million in the companies? If they do it in each company or if they split it off, we will see at the end. So I would suggest that we really get started here with Martin Turenne, who is the president and CEO of Fpx Nickel. Martin, the floor is yours, and I will start the counter, please.
Great. Thank you, Jochen, and thanks everyone for joining today. So we're Fpx Nickel. We're Vancouver-based. We're focused on the advancement of a very large PEA stage nickel deposit in central British Columbia. The project is called Baptiste, and we recently completed a scoping study, or PEA, on that deposit. It shows that this could be one of the largest nickel mines in the world in terms of annual output, among the 10 largest, with a potential for 35-year mine life or more. Projected costs in that study are quite low, around US $6,000 per ton of nickel contained on a C1 basis. So large production outlook for potential for low cost. And we believe we can produce a fair amount of nickel here in a way that may be ultimately carbon neutral, which I'll speak to in a moment. Project is located here in central BC. The land package is called Descartes. You can see our proximity to other large bulk tonnage open pit mining operations in central BC. This is really the heart of mining in the province. Giving you now a satellite view of the project, you can see that the land package we control at Descartes is very large. It covers 245 square kilometers. The main deposit, Baptiste, supports that 35-year mine life. We believe there's potential to delineate other very large-scale deposits within the same land package. The style of nickel mineralization here is rather unique. This is neither a sulfide nor a laterite. The nickel is hosted in a nickel iron alloy named a werowite. Those are the small reflective grains you see in the image here. This is a nickel iron alloy that is readily amenable to a recovery by magnetic separation, ultimately to produce a very high grade nickel concentrate, one that is very low in sulfur and other deleterious elements, and that has 2 ready paths to market and is able to bypass smelting altogether. On the one hand, we believe this product can be readily agglomerated into briquettes and sold to stainless steel producers like classical ferronickel products can. Alternatively, we've also shown in testing with Sherritt, the Canadian nickel company, that this concentrate can be readily leached, that the iron can be precipitated out, and the nickel and cobalt recovered into chemical solution for the EV battery market. So we see a lot of flexibility here in this project. Just quickly on the recent scoping study economics, after-tax NPV on a US dollar basis of 1.7 billion, 35-year mine life, and payback very efficiently in 4 years on an after-tax basis. In terms of our positioning on the cost curve, I think this is sort of critical. We are at US 274 per pound, very low, within the bottom 25% or bottom quartile of the cost curve. However, we still see there's a lot of value here at this today's valuation in the range of 100 million US versus our after-tax NPV of 1.7 billion. We still think there's significant re-rate potential here going forward.
And here comes the cut. I'm sorry, those were 3 minutes and actually 10 seconds. So if you can stop sharing the screen, please, and then our investors are in for 9 minutes for questions, please. So whoever wants to start.
I didn't catch exactly what was the capex of the project.
Yeah, upfront capex is US 1.7 billion.
Is there any way of making that smaller? Is there a smaller scale project there? Is there a high grade core that you could focus on first to make it more sort of amenable to financiers?
You know, we have looked at alternatives at a smaller throughput. We think that, you know, from an economies of scale standpoint, unless you want to assume a significantly higher nickel price than what we've assumed in the study here, that likely this is about the scale you would need.
What price did you use?
775 US per pound.
Okay. What was the basis for that?
Consensus, it was, I think, the average of 6 different analyst forecasts, long-term forecasts.
It all stripping ratio?
The strip ratio is 0.4 to 1. So that's one of the key to driving very low mining costs here, which allows for potential for very low OPEX.
In the leaching study you did with Sherrod, could you talk a little bit about how that works and what you'd use for the leach?
Yeah, it's a good question. So this is, first of all, it's not high pressure acid leach, importantly. It's leaching under very moderate conditions. So pressure oxidation under moderate temperature, moderate pressure. Given the high grade feed here, we'd be looking at a nickel concentrate in the range of 63 to 65% nickel content. The autoclave would be very small. And what happens is basically through pressure oxidation, the iron that's in the concentrate precipitates out as hematite in combining with the oxygen, and that leaves the nickel and the cobalt behind in chemical solution. That solution would then go through steps of separation of the nickel and cobalt, purification and solvent extraction, and you'd be able to produce both a nickel sulfate stream and a cobalt sulfate stream.
Is there an autoclave process?
It is an autoclave process. The autoclave to produce 44,000 tons of nickel in that form per year would have a daily throughput around 250 tons per day, versus typical HPAL autoclaves are around 4,000 tons per day. So quite a small footprint.
Any idea of the cost of that, the cost of getting to a nickel sulfate?
We're currently actually working on internal trade-off studies on that right now. The scoping study assumed that all of the product would go into the stainless market, so we don't have any publicly available information on that costing. But given the relatively small scale of the autoclave, we do think it will be very competitive, both from a CapEx and an OpEx standpoint.
Great, thanks.
Martin, I like the ESG focus that you have here, particularly with regard to CO2 sequestration, of course. Just wondering how much permitting uncertainty there is here, given the location, what that looks like, what sensitivities there are.
Yeah, I mean, sensitivities certainly from a social standpoint, First Nations are critical here. So we have very constructive relationships with 2 First Nations on whose traditional territory this project sits. With respect to the project itself, I would suggest that the biggest risk is probably the tailings facility. This will be a very large tailings facility at this scale of operation. The experience of the Blackwater project, which is also in central British Columbia, about 200 kilometers south of us in recent years, whereby the scope of that project's permitting application was very similar in scope to the project that we have envisioned here. And they recently received their federal and provincial environmental permits. So we think it establishes a strong basis over, a 3 to 4 year period to obtain permits here. We don't see any fundamental red flags.
Okay, so you've got 3 to 4 years to permits. There's also a fair amount of work to do to get to a construction decision on the technical side of things. And presumably you're going to have to work on offtake and what product you're going to sell. So if you add it all up, what's the timeline?
Yeah, sure. So timeline today. So just in terms of, first of all, costs. So there's been about 25 million US invested to take the project to where it stands. We think to get it to a construction ready stage is probably something in the order of 40 million US additional. From a timeline standpoint, with that money in hand, I think it would be about a 5 to 6 year process to a construction ready decision.
Okay, thanks.
That means that there's quite a lot of more exploration required during feasibility or pre-feasibility.
And not really, actually. 80% of the resource is already in the indicated category.
What's driving then the 40 million?
It's really, it's if you look at the experience of other projects in the region, it's really around environmental work. The permitting work is quite lengthy and frankly quite costly as well. And with respect to this project in particular, metallurgical test work at successively larger scales up to and including pilot scale demonstration is going to be significant here. So it's going to require sort of large tonnage of extraction on a test basis, as well as large metallurgical test work, as I said, including pilot work.
And that's all open pit?
It's an open pit deposit, yeah.
Well, it sounds a bit too good to be true. So, but still your PNAV is quite depressed. What's the reason for it?
You know, I think part of it is, listen, a project with this large an NPV, that's a big NPV to sort of measure a market cap against. So inherently, I think you have your risk of being low there. I think the project is viewed as potentially unconventional, given that it's not a sulfide, it's not a laterite, and so further work that we do on metallurgy, I think, can close that valuation gap as we continue to scale up that metallurgical test work. You know, at the lab scale already, it's shown to be quite robust. You know, and you know, frankly, I think, you know, copper projects in particular tend to be higher on that PNAV scale.
Battery makers are particularly fussy about the iron content within cathodes here. How can you be sure that your leaching process is going to get your sulfate up to that quality required?
Yeah, excellent question. So because there is a significant amount of iron in that concentrate that is being leached. So the tests we've done to date with Sherritt show that very efficient removal of that iron in that pressure oxidation stage, and very, very little residual iron making its way through to that chemical solution, which would then be further subject to purification and solvent extraction. So, you know, albeit at a fairly small scale, the iron is being removed quite efficiently under pressure, under POX there.
Okay, thanks.
So what's your next steps then on the project?
Yeah, there's really two paths. So the first path is taking the main deposit Baptiste through to pre-feasibility study. That will involve a little bit of infill drilling, but the real focus there is going to be on metallurgical test work, as well as geotechnical work on the pit and on the proposed tailings site. The other parallel track is the regional exploration. We've got another target called the Van target within the land package, which actually has a larger footprint of mineralization outcropping at surface. It's around a 3 square kilometer target, but it's never been drilled. And so we will be getting in there and drilling that this coming North American summer. And we have hopes here that this could be another very large scale nickel deposit, and potentially one that could be larger and or higher grade than the existing deposit.
Yeah.
I appreciate it's in a different country, but do you think the recent decision on Pebble makes permitting tougher for you?
Yeah, I don't think so. I think there's a whole host of different factors that go into that Pebble decision. For us, we're really focused on, having built very solid first relationships with the First Nations groups in our region from day one of exploration. We also think there's a lot of sort of positive checks in the column for us from a permitting standpoint with respect to sequestration of carbon dioxide, and also the fact that there's no ARD in our tailings. And so the Pebble decision I would argue that doesn't really impact us directly.
Thank you very much. That was great. That was your 9 minutes. Thank you very much, Martin. Great questions from our investors here. And we are moving on as we are here in the pitch battle, of course. Our second company, Eric Desaulniers, founder, president, and CEO of Nouveau Monde Graphite. Please, Eric, the floor is yours.
Great. Thank you, Jochen. So it will be fast. You see my screen, I guess. First is easy. 171 battery mega factories on the pipeline by 2029. So it's a lot of graphite. It's 3 terawatt hour. We were excited by 35 gigawatt hour a few years back. And now Tesla is adding another 3 terawatt hour, so 6 terawatt hour. What it represents on graphite, 3.5 million ton more of graphite needed by 2029 and 2024, when we will be fully ramped up and into production, just short of 2.5 million ton more needed of graphite. So the market is there, and graphite isn't going anywhere. Even though you see a press release every week on new battery chemistry, graphite is still part of 100% of all the mega factories, and it's half of the battery. You all know that. What you don't know is in the Western world, we're significantly advanced. We are the most advanced project out there. And we have a great EBITDA per ton projected starting in 2023 based on our feasibility study. So 112 million ton a year just selling flake graphite, and $220 million when we will gradually ramp up into battery grade graphite. So 100% of it comes from China today, and we are a great alternative for all the Western world battery makers. So in short, we're the most advanced graphite project, perfectly timed with the market, largest scale producer and low cost producer, the first open pit all electric to be fully carbon neutral thanks to our hydroelectricity in Quebec, great alternative to China. And we're located in Quebec, Canada, fully vertically integrated with extremely supportive shareholder base. It's a de-risk project thanks to the fact that we are operating since 2019, since close to 2 years. We're operating a demonstration plant, the flotation circuit, and we were able to train great staff, great people. We have offtakes agreement already on our project. And now let's start real business for only you guys, Mr. the Judge. So we're launching in first primer today, the graphene cosmetic line. If you want to look like GN and be proud of your work, if you want to be working all the time on an insane mode like Jean-Nicolas like this, you want to acquire the Northern Man virility, may or may not work in Europe, I warn you. So today, for the first time, only for you, for 100% of the business, I offer you for $1 million, $69 for 10 grams. I'll let you do your own EBITDA per ton for this product, and I'm ready to answer all your questions.
Super. Thank you very much. That was absolutely perfect. Please stop the screen sharing that we can go back to our normal view here. Eric?
Sure, I am.
Thank you. Great. Yeah, then now questions from our investors, please.
Eric, how far have you got qualifying your graphite with potential customers?
So flake graphite is one thing. We are selling flake graphite, as I said, since 2019. It really took a year. So our sales started early in 2020. So I would say we have about 15 different customers who qualified our product in 3 market segments. First, refractory bricks, the boring but important market for graphite. We have an offtake with Traxxas for 25,000 tons a year, and we have qualified with a lot of customers. Specialty graphite, we're selling ourselves directly to customers, few 20 tons load from our demonstration plant. And we are now qualifying into the battery space because we need further transformation, and we're working on it today, and we're building our facility to be able to provide the anode material. So we're working toward qualification into the battery space in the next 6 months.
Okay, and how long do you think it will take? You say 6 months, is that quite optimistic?
Yeah, so It's unclear. They never exactly tell us their qualification time. So they have received grams and kilograms now. We've made a press release recently about it. The next step for us is to provide them tons, and they need to qualify as well our business model, our cost of production. So that's why we're building demonstration plant to be providing them tons in mid-2021. How long it will take them to secure into the only big producer like us of graphite in the Western world, it's unknown to us, but we expect in the next 12 months that the big OEMs and car makers will need to position themselves into the supply chain to actually to secure some supply.
How big is your resource, and where are you in the exploration process?
So we have a resource of 5 million ton of graphite content. So the resource is about 120 million ton at 4.3% graphite. We have filed a feasibility study in 2018. We are in the midst of receiving our decree here in Quebec, which is a huge milestone for us, and start construction in 2021, in the first half of 2021. So we are finishing up the development phase and hopefully starting into the construction phase in the next few months.
Eric, what's your view on the prospectivity of solid state batteries?
As I said, my view is, there's 171 battery plant being built now, and we were really anxious at listening what Tesla were announcing. They're always the first mover. And what Tesla announced is very securing for the current technology of lithium-ion batteries and increasing the silicon content on the anode side, and incremental improvement into the lithium-ion current technology is just pushing further the solid state commercialization. Today, there's no plant for solid state that is currently being built. And I believe personally that the big question is when the graphite will start being decreased per year, the need for graphite, the demand for graphite. And I don't see that for the mine life of our mine, which is 26 years,
Okay. What about, the replacement with silicon that was mentioned in the battery day?
Yeah, exactly. And there's quite a very good videos about experts that I can send to you, but now they are using 5 to 7% silicon, and the maximum in theory they can add to the graphite is somewhere between 20 and 30% silicon. And if they do that, it's a great news because they will increase the range by 20%, potentially reduce the cost, but there's still a 70% of graphite that won't go anywhere. So 70% of 3 terawatt hour, I don't mind. It's perfect. It's just proving up the technology to be better and better and better. And no one else will be able, no other new technology will be able to get into the market. So for me, graphite is not going anywhere. And I believe it's just good that there are other technologies out there. And when you will see it NASA used in a rocket, maybe we can start thinking that maybe it will be in a car,
Yeah, so just one final question from me, actually. Could you just explain the sequencing as to what's going to happen now in a bit more clearer detail, particularly with regard to the concentrator and then downstream with the anode plant?
Sure. So we have 2 projects. The first one is known. It's stage 1. It's operating. It's the one that I have in the face. It's the 1,000-ton flotation circuit that is operating since 2 years already. Next step is to build a concentrator right on site, 5 kilometers south, and build for $211 million capex and start construction next year to have 100,000 ton a year of flake capacity, producing flake graphite. And then in the meantime, in Bécancour, close to the St. Lawrence Seaway, we have a module where we are building today the first 2,000 ton of conversion capacity into battery grade graphite. And the next step is to build 20,000 ton across the street of the current 2,000 ton facility we are building. So it's 2 projects. They have both of them their own timeline. We can do only the flake graphite production and be very profitable. But gradually, we want to also get into the battery-grade graphite to increase margins, and also because we do have a lot of market shares opportunity, being the first mover in the Western world. So focus on the mining concentrator next year, but also stage 1 for the purification and coating, and then ramp up to the stage 2 at the purification probably in 2022.
You showed great demand development. How do you see the supply side, especially coming from all the projects in Tanzania and Mozambique that are in the pipeline to come online also in the next couple of years?
Yeah, there's a lot of graphite coming from Africa. There's a great deposits coming from Africa. But when you see in the market what is successful today, it's full vertical integration. Costs are not going, costs are where they are, but the price for anode material, we don't see it going much higher than that. So you need to be profitable at current price for anode material. There's one very successful company, it's in China. It's BTR New Material Group. They do have 3 mines. They just financed a 4th one, and they're full vertically integrated in China. That's what we can do here in Quebec. We have a great deposit, lower cost producer at the flake level compared to the African deposit. It's great. And also we have one of the lowest cost electricity in the world. We are located in an industrial park where we are located actually in our supplier facility to reduce costs. So at 3 cents per kilowatt hour US, and have all the infrastructure in place, an hour and a half from our deposit being full vertically integrated. That's the way to go to reduce costs and reduce, and localization is important. And doing all of this carbon neutral, it's all premium that will be given by especially a European car maker and OEMs. So Africa is there, but doing the transformation in Africa is quite a challenge. It's, you need to have the proper infrastructure in place. So what we see today is people are trying to find conversion plant elsewhere than Africa, and it's increasing costs significantly to not be fully vertically integrated.
One more question.
Eric, how much of your production should we expect to see under an offtake before you commit to building the project?
Now we have 25% committed into the refractory market, who's still today the largest market. That's enough for this market segment. The specialty graphite, we want to do direct sales because we have a lot of sales experts who are selling to those guys and will increase margins. And then we are looking for an anchor customer for the value added who will take 1/3 to half of our transformation capacity and will only finance it in partnership with an anchor customer. We won't, it's not like the mine, you know.
Super. Thank you very much, Eric. Great presentation also. And yeah, let's move on to our third company, and that would be Scott Hicks, the CEO and Director of Strategic Resources. Scott, the floor is yours for 3 minutes.
Thanks very much. I appreciate being here today. So the company I'm going to talk about is Strategic Resources. We're a fairly new company, but this is a Lumina Group company. So for those of you who don't know Lumina Group, it's really been the same technical team for the last almost 20 years. Leo Hathaway as our senior geologist, Marshall Koval as somebody who used to run Pincock out in Holt in the States and has a great technical background. Myself, I'm the new guy to the group with about 3.5 years with the group. So, you know, our history is really advancing large-scale copper and gold projects, de-risking them, and then looking to sell them on to majors who would put the assets into production. So over this period, we've raised $290 million across these 7 companies and returned about $1.6 billion to investors. We currently have 3 public companies, Lumina Gold, Luminex Resources, and Strategic Resources. You know, on the vanadium side of things, we see a lot of prospects for growth here. We see increasing steel demand going forward. We see the vanadium redox batteries becoming a bigger part of the energy mix. And, you know, we think those are going to be the key drivers going forward. Obviously, COVID's put a bit of a dent in the aerospace demand for this year, but, you know, we're looking forward to that coming back here post-vaccine as well. We truly do believe that these batteries are better batteries for certain applications. You You know, when you look at what vanadium batteries can do for grid scale storage, if you're looking over a 20, 25-year mine or project life, you're going to get a way better outcome than going with the conventional lithium battery that's going to degrade over time. It's easy to recycle all the material on the back end. You can even lease the material over the life to reduce the upfront costs. So we think there's a lot of growth in this segment going forward. So far, we have 2 projects in Finland. We acquired the past-producing Mustavara mine. This used to produce about 10% of the world vanadium in the 70s and 80s. We've just brought over the resource into 43101 in September. We're looking to update a PEA early next year. This project was taken to PFS level in a private company in 2012. We have a secondary asset, a higher grade asset called Silaselka that's further north in Finland. We're looking to drill that in the next year. And then we really want to use this company as a platform to bring in other energy metal assets. So not necessarily vanadium, but really looking across the space. I mean, our group obviously has a history in copper. We'll continue to look there. We'll look at vanadium, and we'll look at other energy metals that we think make sense. So it's early days, but I think it's an interesting company to look at. So with that, I'll pause for questions.
Super, thank you very much. Perfectly in time. I like that a lot. Yeah, please can you stop sharing the screen that we have everybody again here on the white screen?
Yeah.
Thank you very much. Great. Yeah, please, to our investors, questions.
Yeah, I had a couple of questions there. Thank you very much indeed for the presentation,
one second,
Scott.
Philip. I think Aline was first, but she did not put on the mute. Aline,
I
are you now
apologize.
unmuted?
Sorry, no problem.
Good.
Always forgiven of Philip Clegg. Just a few questions. What is the expected cost in each of the projects? So production must ramp up and CapEx. And in terms of structure, would you be pitching for the group or would you be pitching for a specific project?
Sure. So, you know, on the old PFS, the quantum of CapEx and all these numbers are getting updated right now. So take it with a thumb in the air. But the old quantum was around 500 million euros. About 30% of that was for the concentrator in the mine site. About 70% of that was for a smelter at the coast that would produce your ferrovanadium and your pig iron products. You know, we'd be pitching for early stage equity to continue to de-risk the project. You know, we'll be having a better sense of what a PFS or maybe going straight to DFS would cost in early 2021. You know, a unique aspect I didn't mention about the project is that it is the mine site itself and the concentrator are permitted right now. So another goal in 2021 will be to extend those permits. They currently run out in 2022 if you haven't started construction. So, you know, we'll be using funds to work on the permitting side as well.
Using vanadium pentax or ferrovanadium?
Ferrovanadium 80. So it's about 55% revenue from the ferrovanadium and then about 45% from the pig iron.
So not directly suitable for your vanadium redox batteries?
Not directly suitable, but I mean, we do believe that obviously, you know, a rising tide lifts all boats, and we think that, you know, as primary demand, as demand comes on, these primary producers are going to have to produce V2O5, and it will increase prices across the market. But there is a substantial premium right now for the ferrovanadium, obviously, over the V2O5.
Can't you use an intermediary MVO product to produce the electrolyte that you'd need in VRFBs?
Yeah, you could. You know, we just think that with the current premiums and what we're seeing in pricing, that the ferrovanadium is going to give you a better economic outcome at the project.
I suppose that, you know, you're not going to see production for some time though, so you'd imagine that the world will be a little bit different with so many renewable projects coming on stream by then.
Yeah, exactly. And I mean, I think, you know, there's some very interesting leaching technologies that are being explored right now. You know, so for instance, we're looking at wasting the titanium. But, you know, I think there's some interesting leaching products that would allow you to get all 3 products out of these VTM deposits. So we're going to pursue those simultaneously. But, you know, the base plan is the smelter with those 2 products as of right now.
Why did Mustavara stop producing back in the 70s and 80s?
Yeah, vanadium dropped below about $1.50 a pound, and they shut it down at that point, and then they decommissioned the mine site. So right now, all that's there is the open pit and the old tailings impoundment. It's all been decommissioned. But obviously, the nice thing is, the metallurgy works, and there's the infrastructure for a mine because there was one there previously. So I mean, a lot of the conventional risks that you get asked about mining projects have already been addressed.
Okay.
Scott, if vanadium redox is so good as a battery, why is nobody using it? Is there somebody out there who's is going to break the ceiling here?
Yeah, it's a good question. I mean, I think the guys, so we've toured a couple plants. We've toured the Avalon plant, which is now Invinity, and we've toured the Enerox plant. I would describe both of those companies as being a bit, startup and capital starved. I think Bushveld has done an amazing job in the sector of injecting capital into these type of companies, and they're starting to grow. We're obviously seeing large scale deployment in China. We're starting to see more deployment in Australia. So I think it'll grow. I mean, also it's a small market, right? It's only 100,000 ton a year market. Batteries are 3% of it right now. So it doesn't take a lot of growth in the sector to kind of, change the market dynamic.
Yeah. Do you think that you'll continue to adopt the Lumina strategy of selling the project pre-production?
Yeah, it's a great question. I think from our perspective right now, the workflow is the same either way. We'll look to de-risk it, and then we'll see how we go. There's not a lot of primary vanadium producers, so I think it is a niche that there's certainly space for more, but we'll see how we do.
Okay. What's your view on niobium substitution?
Yeah, it definitely puts a ceiling on the price, and it's a good question. I mean, obviously, when we were at $100 a kilogram of ferrovanadium, you were going to see that substitution. But I think there's a long way from the $28 a kilogram we're at now, and that substitution. And obviously, as China increases the rebar standards, and they've been slow to enforce it, but I think that'll probably add 20% to demand over. Everyone thought it was going to be right away, which is why you saw the price spike. But I think it'll realistically take 5-6 years to go into place. But that'll increase your base demand in the market.
Is there a price that vanadium starts to impinge on the growth of batteries?
Definitely, yeah. So I mean, RBC Research put some numbers together. They think they're competitive in the $7 to $8 range. I've heard people say lower numbers. Per pound V2O5. So I think this low price environment right now is actually quite helpful for the battery producers to help them scale and get the fixed costs of the batteries down. And then the other thing is, Bushveld, if you look at an agreement they just put in with Invinity, they're actually leasing the vanadium to the battery manufacturers to help get down the upfront cost. And what that allows them to do is, implement more systems. And then Bushveld owns that vanadium and gets it all back, 20 years from now, 25 years from now when the battery life's done. And it's all easy to recycle. So, I mean, people are being creative, and hopefully we see more innovation in the space.
What's your annual production and life of mine?
Yeah, so in the old PFS, it was just under 5,000 tons per year of ferrovanadium and just over 300,000 tons per year of pig iron.
So given the increasing intensity of use of vanadium in steels, particularly in China, and the enforcing of these new standards, why is it with that sort of demand outlook, the price just hasn't moved?
Yeah, so 2018, 2019, you did see the substitution you referred to, which kind of took the heat off the market. Obviously, this year, I think with COVID, we've seen reduced steel demand. We've seen basically zero aerospace demand. I don't know about you guys, but I haven't been on a plane this year, and they're not building a lot. But we're hoping that all of that kind of recovers in 2021, 2022, and lines up with when this project could start construction.
Okay.
Who would be your target off-takers? Is it European steel?
You know, I mean, we've talked to some off-takers. We were actually talking to off-takers in the context of maybe selling a concentrate only, given that that's permitted. But I don't think the math works on that option, just given payabilities on the different products. But you know, we've in those discussions certainly lots of people who would take the ferrovanadium and the pig iron. Pig iron seems to be, you know, quite in demand right now as you look to see people taking out impurities in the recycled steel in markets.
Perfect. Thank you very much, Scott. And now our judges have some seconds to make up their mind. Yeah, thank you very much to all three companies. Martin and Eric, please also switch on your videos that we can see you. That would be great. Well, we have listened to Martin Turenne from Fpx Nickel. We have listened to Eric Desaulniers from Nouveau, Monde, Graphite. And now, last but not least, of course, Scott Hicks, the CEO and Director of Strategic Resources. And now it's time for decision-making for our judges and investors. And I would like to start, ladies first, of course. Aline, you would be first. Whom do you want to give your $1 million?
So we can split it, right?
Yes, don't make it too complicated.
Okay.
Otherwise, I have to start mathematics here.
Yeah, sure. I would put half into Fpx Nickel and strategic resources. Nickel project, because from a commodity perspective, I think the timeline of the project that is coming online is quite necessary. It's a commodity that will be in extreme deficit, and although I think the assumption is slightly higher for a PA study on prices, I think makes sense. So that one is from more of a commodity perspective on the timing of ramping up of the project, and like strategic resource that it showed like the background and the track record of the team. Happen to like vanadium and all that space quite well, so that's how I would split the $1 million.
Super, perfect. Thank you very much. And you see, it's so easy for a woman to spend $1 million just within 2 minutes. I love it. Philip, you are the next one. Whom do you want to give your $1 million?
I'm going to give mine to Eric at Nouveau Monde. You know, I kind of like nickel as well, and I like vanadium, but the two projects aren't defined enough for me as an investor. I like Nouveau Monde, and the reason I like it is because it's got a great ESG focus with, you know, fully electrical mine, carbon neutral status, clean power. It's, you know, they've proven themselves because they've built a demonstration plant that's been operating for a while. The product has been tested and certified. The business model is across the entire value chain. And so I think, you know, with a relatively modest capex, I think there's a real company here. And so I give the $1 million to Eric.
Okay, super. Thank you very much. Will Smith, you are next. To whom you want to give your $1 million?
Yeah, thanks, Jochen. Before I start, I'd just like to say that when I look at what's been raised by the downstream end users of these products, all of these companies are going to have to raise some money to meet the expected demand. The car makers and battery makers have no trouble raising capital at the moment. So the industry producing the raw materials is going to have to get very busy very quickly. I'd like to find out a bit more about FPX, in particular the processing section. But my $1 million would also go to Eric on the proviso that he gets a few take or pay contracts before he starts building. Whenever you see commodities that aren't exchange traded, it's absolutely critical to have firm contracts for your production before you start building. And graphite, they are particularly picky about the quality of the product. But that's where my $1 million would go.
Super, thank you very much. And then Jonathan Cordero, please, whom do you want to give your $1 million?
I'm very bullish on vanadium. I think historically has been a bit of an underdog, but I believe vanadium redox batteries have great potential. So I would definitely give my $1 million to the vanadium project.
Okay, super. Thank you very much. So everybody got at least money. That's great. And yeah, we have a winner, and that would be Eric Desaulniers from Nouveau Monde Graphite, who is leading with 2 millions here in front, and 500,000 for FPX and 1.5 million for strategic resources. Congratulations. And yeah, we are coming to the end of our pitch battle here. Unfortunately, we cannot give you the bottle of champagne. Hopefully we can do that next year in London personally then, because it makes much more fun, to be honest. But it was great to have you all here. Thank you very much to our presenting companies. I know it's always tough in 3 minutes to do that, but you have done all very well, and I wish you all the best, of course. And also thank you very much to our investors for asking very good questions, very professional. Everybody was staying in time. I like that a lot as a moderator, of course. And I wish everybody Merry Christmas. I wish you a lot of good health and a lot of luck to go through those shaky times, and hope to see you all latest, I would say, Mines and Money London, because until then COVID should be gone. All the best. Thank you very much. That was the mining pitch battle for the Mines and Money conference here virtual. And yeah, have a great evening wherever you are in the world. I will have a gin tonic now. So all the best, and thank you very much, and bye-bye.
Bye.
Bye.